Hello and welcome to our YouTube channel. As promised, we are back with our short come long trading tip after doing some great gold digging for you guys. So guys, if you're really liking our all the videos, then please do praise Mr. Karan, who is the content creator who burns us midnight oil to do great gold digging for you guys and also to the team. Also kindly subscribe to the channel and share the video to maximum number of people and on all the social media platforms. Top short-term trading tip for this week is buy Dabur India Limited. Buy at CMP rupees 515 for a short-term target of rupees 525 in a day's time, range-bound short-term target. Long-term target rupees 600 for a 1.5-year holding period. Fundamental analysis. Dabur India Limited reported yet another strong performance in Q3 financial year 2021 as we emerge from this daily pandemic as seen from the quarterly numbers. The reported revenue growth was rupees 2,728 crore, which is rupees 2,688 crore, our estimate. 16% year-on-year increase driven by strong domestic performance, which grew 18% in terms of volume. The strong volume growth was driven by excellent execution, strong and relevant NPDs, and category tailwinds in health, hygiene, immunity products, driven by shift in consumer preferences. Core EBITDA margins of 21.0% plus 10 BPS year on year, which is 21.9% our expectation, despite 39% year on year spike in A&P spends, 10.3% of revenue. Reported EBITDA came in at rupees 574 crore, up 16.5% year on year, and PAT growth was 23.7% year on year at rupees 493 crore, which is rupees 482 crore, our estimate, driven by healthy operating performance. IBD delivered a strong double-digit growth of 13%, which is 14.1% in CC terms. Strong category tailwinds in health supplements drove robust 28% year-on-year growth in health supplements, where market share in Chyawanprash category increased by 120 BPS and market share in honey category increased by 700 BPS. OTC and ethical segments grew by 34.1% and 23.2% year on year, respectively, while digestive remained muted and reported marginal growth of 0.3% year on year. Home care and hair care business have reported a healthy growth of 16% year on year, unlocked in a phased manner, and we expect the same growth to continue going ahead. Under the new CEO, Dabur is seeing a transformation of being fearless in launching NPDs, re-strategizing distribution and go-to-go market, modernizing and contemporizing formats of core Ayurvedic products, and likely rise in A&P spends to invest across its power brands. We have kept our estimates unchanged and accept double-digit volume growth and strategic shift in A&P spends. Retained buy and TP of rupees 600 in a 1.5-year holding period. In recent quarterly announcement, Dabur highlighted that demand momentum continues to remain healthy in October and there would be channel filling now due to festive season, this time in Q3 versus Q2 last year. Q2 of financial year 2021's robust growth was driven by innovation and super execution capabilities. Market share gains have been reported across categories and in major e-commerce portals. Management says it intends to increase A&P over the long term as it invests behind growth, as innovation would remain as Dabur's cornerstone for growth. It looks to launch NPDs in categories where there is a right to win in terms of market size, low competition, and has higher margin potential. Under the new leadership, there has been a cultural change, and the company is now open taking more risks. Recently, it launched Real Juice in PET bottle format, health drops, health juices, amla juice, and chutney. It also launched Dabur toothbrush, Dabur RTP, Honitus herbal lozenges in MENA. The next observation is that the surge in e-com sales sustained. Dabur has launched most of its new products like healthcare juices like aloe vera, ashwagandha, giloy health drops, which saw good traction, and it said it will continue to launch new products over e-com before launching it in other channels, as it can measure its acceptability easily over the channel at lower costs. Ecom now contributes 6% versus 1 to 2% earlier. Dabur expects its ET, MT, and cash and carry channels to keep getting larger. Hence, it will focus on launching brands towards these channels. We continue to believe in Dabur's medium to long term growth story, which remains strong, and like management's newfound aggression in driving growth for its power brands by expanding, modernizing its core portfolio, fearlessness in launching NPDs, and go to go market initiatives. We broadly maintain our estimates over financial end of financial year 2020 to 2023 and expect the stock to report 8%, 12%, and 12% in terms of revenue, EBITDA, and PATCAGR. The stock trades around 510, which is attractive given the healthy earning visibility. Retained buy and TP of rupees 600. Technical analysis. The stock has recovered from the pandemic lows and is showing consistent support, and with better results, the company is performing well on the bourses with the stock prices rising in a consistent trend line, hitting the support and resistance on a routine basis. So one need to accumulate at 495 to 515 levels and hope for a rise of 20% to 600 in a year or 1.5-year time frame. It's a stock that is not a high beta counter, and the RSI and MACD are also in neutral zone as expected. The stock gives a stable return over a year on year basis. So anyone needing to play short term can take advantage of 5 to 7 rupees price movement and take intraday of or 2 to 3 day trades with a capital of 3 lakh to begin with, and buy at rupees 150 and sell for rupees 515 for a cool gain of 2000 bucks in a mere 8 to 10 hours. That's the advantage of low beta stocks. Quick ultra short term gains are possible on this counter. Long term target is rupees 600, and it has to be seen that this company has consistently rewarded its customers and built a trustworthy brand and generated great returns for the shareholders. My suggestion will be to buy some capital for short term around 50% and some capital for long term 50% to make cool consistent gains. So guys, buy Dabur at CMP rupees 510 for a target of rupees 600 in 12 to 18 months time frame. Let's hope you're liking all our earlier videos. Also, our videos on Happiest Mind Limited was amazing with the traders making big gains due to unforeseen volatility in the stock prices. The shares of Happiest Mind Limited were recommended at 380 bucks merely a fortnight ago, and now the prices hit 550 just yesterday. So that gave a cool 40% gain to my listeners in just 15 days. I hope these videos build trust among the YouTubers for the stock market and the people raising their risk appetite. Continue buying after doing some thorough analysis and generating self insights to earn in this market, which is unpredictable and requires a lot of discipline, time, and focus to take a position, trade, or investment. As said, concentration is mother of all the success. The market demands just that. So, guys, be prepared for the risk and uncertainties. But if calculated risk is taken, then one can earn. Also, one can make 5 to 10 trades also per year and make a big profit, about $1 million of bucks, enough to meet his annual expenses. So keep at it and keep growing in experience and learn from your mistakes and past losses and learns. So guys, that's it for today. Kindly like all my videos and also comment on the budget day video of option buying if you made about a lakh of rupees. We'll be back with mind-blowing technical analysis as well as very best of Hum Do Hamare Do season. So stay tuned and thanks for watching.